Well, good afternoon, everyone. On behalf of OrbiMed and my team, Trevor and I want to welcome all of our WWH shareholders to our routine 6-month results update call. And on today's agenda, Trevor will cover the 6 months performance update. He will go over some of the factors that have driven positive and negative performance. And then he will cover some of the big 2023 investment themes. I will, after that, take over and talk a little bit about the big themes for 2024. We'll give an outlook on what are the next big things. I will discuss as well the portfolio positioning and then our playbook. And I want to reiterate once again that this is supposed to be an interactive call, so really please post your questions. Trevor and we will take a lot of time actually going through all of the questions at the end of the call. But with that, I hand it over to Trevor.
Great. Well, thank you, Sven. I do want to kick off with a review of our performance of the first half of the fiscal year. And this slide represents the black and white of it, our 6-month performance for the fiscal year so far. The gray line being our benchmark, the MSCI World Healthcare Index, which is modestly up for the period. And then the blue line is the Worldwide Healthcare Trust, which is modestly down for the period, with some clear signs of volatility in between. But I find a better way to look at these data is actually look at 3 buckets or 3 segments of performance that I would highlight. And this slide shows roughly 2-month intervals for the first half of the fiscal year. The first segment is a period of clearly material outperformance for the trust, where fundamentals really mattered, and stock picking really mattered as well. Global markets were stable, recessionary fears were somewhat easing, interest rates were still being debated, healthcare traded in line during this period with the broader market, biotech did well, and we had many sources of alpha during this first segment. But the second segment was very different from a macro perspective. This is a period of underperformance where macro factors really took over, and stock picking really didn't matter during this period. Investor confidence in the economy started to really rise during this time. Recessionary fears dropped significantly. Tech stocks rallied, and investors were chasing growth. The S&P hit an all-time high at the end of July during this period, and healthcare started to lag historically, and biotech reverted. Stock picking did not matter during this period. It was all macro. And then finally, the third segment in this slide, this was a mixed period of both fundamentals and macro. We had some nice modest outperformance. The US credit rating was downgraded. Interest rates, the theme of higher for longer became a clear talking point. But interestingly, this is also the period when the Novo obesity data in cardiovascular prevention also came out, and this created a bit of a spotlight in healthcare. The broad market rally sort of hit a pause while healthcare started to continue to advance forward. This is a little bit offset by a sell-off in medtech, but overall a positive segment for us. I want to take sort of one further step back to a 9-month view by adding the first quarter of the calendar year to the buckets of performance. We see here 3 out of the 4 segments. We have posted some positive alpha so far well into 2023. It's been a reasonably good period for us. And then this slide shows the full calendar year to date with the trust down 1.7% and the benchmark down almost 300 basis points to the end of September. Looking at contribution by subsector, I would highlight 4 sectors here specifically. First of all, starting with pharmaceuticals. This is our largest contributor to date at nearly 200 basis points, highlighted by very important positions we have in both Eli Lilly and Novo Nordisk, and of course the obesity trade, and I'll discuss that a little bit further in this presentation. MedTech is a second sector I would highlight here. It's been very strong for us. both positioning, but especially stock picking in here. Intuitive Surgical, a big winner for us. Boston Scientific, also another winner for us. On the flip side, two things I would highlight is, first of all, Japan. It's been negative for us, but it's really kind of dependent when you start and stop here. Both our key positions in Japan, Daiichi and Eisai, started the calendar year quite well, but we saw a little bit of profit taking around March after some key positive events for Daiichi came out. Eisai sold off after their approval for their Alzheimer's drug in the US. Biotech, the broad underperformance of the XBI has certainly continued this year. We have had some notable winners, including Mirati as a key winner for us, and Ionis as well. But the overall negative performance here, I think, is more of a product of the biotech tape than anything else. This is an interesting slide. This is another cut of the performance contribution by market cap for both the trust and our benchmark. And you can see clearly here that large cap stocks have significantly outperformed small cap stocks during this period. But unfortunately, we're heavily weighted in the small caps versus the benchmark at almost 23% versus only 2% for the benchmark. It's really a large cap benchmark, to be quite frank. And we've been underweight large caps, 78 to 98, although our performance there has been very solid. And the performance since inception, this is something we're always quite proud of. But just to set the scene here, the double blue lines at the top are the trust share price and NAV, our benchmark yet again here in gray. And then we've added the FTSE all share here in purple just to show a broader market comparison. And I think this chart shows three important things. First, exposure to healthcare in your portfolio is really a must. The outperformance of the benchmark versus the broad markets for nearly 3 decades now is quite undeniable. But second, it also puts, I think, the recent performance in perspective. We've had other periods of volatility from which we've consistently bounced back from. And then finally, I think this chart shows that an active manager in healthcare can really outperform the benchmark over the long term, given the very idiosyncratic and highly complex nature of this industry. So how did we get here? I want to discuss some of the things that we've been working on for the past year. There's a number of key themes that I would like to review. In the interest of time, I'm just going to start in earnest. First of all, this slide shows the performance of the S&P versus its sector constituents to the end of September. And the healthcare underperformance here is very clear. But in fact, it's the worst that it's been in over 2 decades. The spread between the S&P performance and the healthcare constituents within there. Bit of a simple explanation for this. We just simply didn't have a recession that many predicted that we were going to have in 2023. And that expectation was building towards the end of 2022. The interest rate environment has exacerbated this, and clearly the market has been chasing tech and communications. In other words, this has been a very difficult macro environment for healthcare. And as I mentioned previously, as we've shown before, the record biotech drawdown continues to make new records, unfortunately. Now stretching past 2 years, the XBI has experienced the longest and largest drawdown in its history, both relative and absolute. But the good news here is that we're at least off the bottom, and there's a lot of upside from here for biotech in general. A few comments about drug price reform in the US. If there's been one thing that I think has been a real hallmark of 2023, it's the drug pricing reform that has passed in the US. Yes, we do have a new law that came late last year. And this slide is almost actually a year old now. This is where we articulated our views on the IRA 2022. Parts of it we considered neutral with the drug price cap, parts that we thought were positive, which was the Medicare redesign, and some parts that were negative that we thought were manageable, which was the drug price negotiation, which is the key part of this legislation. And our view really hasn't changed. Just last month, I was on a call with the CEO of now the largest pharmaceutical company in the world, which is Dave Ricks from Eli Lilly. And he made some very public comments about the IRA and drug price reform. And his views were completely consistent with our own. Drug price cap, he called it a nothing burger. The Part D design, he sees it as a positive. We expect a volume tailwind with the Medicare Part D redesign. And then finally, on their drug price negotiation, he thought it was disappointing. And I think that's clearly the industry perspective. And in fact, the industry is now pursuing legal action against the government to perhaps quash it as part of the law. And just last month, the list of 10 drugs was published by the government. These are the first 10 drugs that will face drug price negotiation when this part of the law is enacted, which is in 2026. And this list shows how it compares to some of the top selling drugs in the US. Clearly, the COVID drugs are there, but only a handful of the best-selling drugs actually made the list. And so there was a few surprises here. And what strikes me the most is how I think political this list came. Look at the therapeutic areas represented here: cardiovascular, diabetes, arthritis. These are drugs that are well known by seniors who take them every day. And what do seniors do? They vote in these elections. Only one cancer drug made it, which was a little bit surprising. And some of these drugs on this list aren't even close to the top selling drugs. Januvia is there. Farxiga is there, 2 diabetes drugs. Insulin made the list. It's a little bit unclear the methodology the government used to create this list, and that was actually even called out by AstraZeneca. But what's interesting now is that the industry has clearly responded. Since the list has come out, we have now 9 lawsuits against CMS. One was dropped from Astellas because their drug didn't happen to make the list. But the Trade Industry Association, the Chamber of Commerce, 6 other companies are all suing the government. And there's a variety of arguments that they're using, some of them on constitutional grounds. I'm not an attorney. I won't go into the specifics here, but the industry is clearly taking a shots on goal approach here. We have a host of lawsuits across different districts and geographies, and a judge from any of those courts could rule in favor of the industry on any one of these arguments. And even a single ruling against the government could halt the drug price negotiation portion of the IRA. Ultimately, the Supreme Court will have a say. But the point here is that the optionality to quash this part of the law remains anytime ahead of the 2026 enactment. And that would be significant upside, I think, for the industry. Another big theme for us, really for the last couple of years, is really been M&A activity. Just wanted to go back one. There we go. M&A activity continues to surge. We've seen acceleration of M&A activity that really started in the middle of last year, has continued into this year, actually even accelerating into this year. It's really record-setting performance. 17 deals in the first half of this year, another 3 deals already announced so far in October, and we expect this pace to continue well into the next fiscal year as well. Well, on to innovation, and I think this is the real hallmark of the Worldwide Healthcare Trust. And this is a very interesting slide. It's pretty busy, but we first made this slide, and Sven presented it at the AGM in 2022. This was somewhat of a snapshot of things that we were working on for 2023. Now we've turned this slide into a scorecard, if you will, and to update you on all of the things that we've been working on. And you can see how positive so many of these outcomes have been over the past year or so. Starting in oncology, ADCs, we talked about AstraZeneca and Daiichi, now the global leaders in antibody drug conjugates. We had new data that showed that Enhertu as a breast cancer drug is clearly now the new standard of care in a certain subset of breast cancer. IO, immuno-oncology, This is the $50 billion class of drugs which stimulates your body's own immune system to fight cancer. We have a next wave of drugs coming, one by Bristol Myers Squibb that was approved, which combines PD-1 with LAG-3. But we've also had some initial data from Roche, from TIGIT. We're waiting a final analysis there in lung cancer. This could be very big for that class of drugs. And in targeted therapies, AstraZeneca had two big new data sets presented just a couple months ago in early forms of lung cancer, as well as combining Tagrisso, which is their lead targeted agent in lung cancer, combining that with chemotherapy as well. Obesity. Well, you can't get through a single day without talking about obesity. It's all been very clearly positive. Lilly's Mounjaro has been filed for obesity, approved in diabetes. Wegovy got approved in diabetes, but perhaps the most important thing is the SELECT cardiovascular outcomes trial read out for Novo Nordisk. And that surprised to the upside that we learned that this drug taken over a 5-year period can reduce your risk of a heart attack, stroke, or cardiovascular death by up to 20%. That's been an incredible game changer for the entire industry. And we'll talk about that a little bit more as well going forward. But also next generation drugs, including oral drugs from the same pathway. We saw positive data at the diabetes meeting over the summer, also very incredible. And finally, Alzheimer's disease. This really started in earnest last September when Eisai presented their positive data, the first ever positive data for a disease-modifying agent for Alzheimer's disease ever to be reported. That drug called lecanemab, now the brand name Leqembi, got approved earlier this year. That was followed up by a modest disappointment when Roche's antibody from the same class failed. But it did show a positive trend. So it still supported the beta amyloid thesis. But then finally, Eli Lilly most recently reported positive data again for their monoclonal antibody. We'll have data later this month, the full data set, but incredible achievements for innovation across 2023. And then some of the specific catalysts we were focusing on in 2023, starting with large cap pharmaceuticals. This was a slide that was forward-looking when we first made it. Now it's another scorecard. It's been completely updated to what has happened. And again, it's been nothing but positive outcomes. Novo Nordisk, I already mentioned this, but that SELECT cardiovascular outcomes trial has been a complete game changer. I mentioned Daiichi and Astra with Enhertu, but their next generation ADC called Dato-DXd. This is one of the next big things that we've been working on. They had a press release that was positive, that met the primary endpoint in the treatment of lung cancer. There was some controversy there, but we'll see the full data set this month for Dato, another important thing we're working on. I mentioned TIGIT already with Roche. It was interesting. The company accidentally leaked some data for their lung cancer trial, but it showed a 20% benefit over the standard of care. We're awaiting the final readout that might come next year. Sanofi, another important catalyst that re-rated that stock. Their blockbuster drug called Dupixent, which is an immunology drug, which is a really hot space right now. They showed a benefit in a disease called COPD, which is really more known as smoker's cough, that showed dramatic reductions in exacerbation there. That re-rated the stock higher. And of course, I've already mentioned Lilly and Alzheimer's disease showing a benefit there. That drug we expect to get approved before year end. Been very positive with some of these things that we've been working on. A couple of mentions in the medical technology space that have also been important. One I would mention is Intuitive Surgical. This has been an important holding in the trust for a while now. This is the robotic surgical maker that makes the Da Vinci surgical suite. The company was expected to perhaps release their next generation product this year as early as March. Didn't happen. stock sold off. We made some very important buys on that news. But throughout the rest of the year, the company has clearly reverted and has been hinting that something is in fact coming in terms of a next generation offering, probably early next year. And so we're eagerly awaiting. One of the best kept industry secrets is how they're going to improve on already the industry leading surgical robot. And just recently, we had another big catalyst in the medtech space, which is from Boston Scientific. They debuted the data for their new atrial fibrillation ablation device. Data was just presented, and it showed a superior trend over the current standard of care, an upside surprise. And we really expect significant market demand for these two hot areas. Finally, a word on biotechnology and some of the catalysts that we saw in 2023. I know there's been a lot of hand-wringing in the space for the last couple of years, but let's just look at some of the incredible landmark achievements by the biotech industry in 2023. This wasn't a prospective list like the others, but rather a retrospective one. But just let's look at it. First approval for a gene therapy in hemophilia. First approval for an oral therapy for severe GI infections. A first approval for a gene therapy for a serious skin disease. A first approval for a gene therapy in muscular dystrophy. A first approval for a treatment for genetic spinal cord degeneration. A first approval for a TRUES disease-modifying agent in the treatment of Alzheimer's disease, which we've already discussed. And even landmark proof of concept data for a therapeutic cancer vaccine. This is just a handful of incredible milestones achieved by the biotech industry this year. We hold them up simply as a snapshot of some of the incredible innovation that drives the healthcare industry forward. With that, I'm going to turn it to Sven to discuss some of the things that we're working on for 2024.
Okay, thank you, Trevor. So yeah, the biggest disruptive theme of the year continues to be weight loss drugs, and I think it's going to continue in 2024. It's been amazing actually what the weight loss drugs have done for Eli Lilly and Novo Nordisk. Novo Nordisk is now the largest market cap in Europe. Eli Lilly is the #1 healthcare company in the world. They are now in the top 10 of all market caps in the stock market worldwide. So they're right up there with the Apples, the Googles, the Amazons on the world, and Eli Lilly, and it's all due to one theme. It's weight loss drugs. You know, we have seen this theme develop for 10 years, and you know, for us specialists, what we are asking ourselves, when do we see peak weight loss? You know, when do we see the peak in this trade? But it's hard to see actually it peaking, you know, even in the first half of 2024, because we're still just in the rollout phases of these weight loss drugs. We had been manufacturing constrained, and it's really fully rolling out here over the summer. And now finally we actually get, you know, a Mounjaro, the weight loss indication, just approved from Eli Lilly. So we're going to see an incredible boost in revenues and an acceleration actually happening here in 2024, and this is really important. And I think what's going to be interesting is as well the additional data readouts that when you do lose weight, you know, that you have these positive outcome in secondary health, like cardiovascular disease, dialysis, and so forth. And I think this has been the disruptive theme, I think, overall for healthcare, because I think there's a lot of read-throughs to other subsectors as well. When you lose weight, you know, you may be going to be less sick, and there will be less cells for other subsectors out there. I think another key area is going to be, we're going to get second generation weight loss compounds getting rolled out, and we're going to get a ton of news in this in 2024. I think so the momentum will continue there. You know, Alzheimer's disease should have been really the #1 theme, and it has been really overshadowed by weight loss drugs. But this has been, you know, in a normal year, this sort of would have been the big theme of the year. But we do believe, you know, that Alzheimer's disease is going to continue to increase in importance. The rollout by Biogen Eisai is just happening as we speak. Eli Lilly will roll out their Alzheimer's disease drug next year. We're going to get additional data readouts. And we know, I think there is high hopes, I think, from the scientific community that we are really having a real impact on Alzheimer's disease. So we really see a big step up, I think, in the news flows on Alzheimer's disease. And I think there could be quite a bit of step up as well by additional developments by the other major players in the field, because, you know, all the big pharma companies, they have kind of lost out on weight loss drugs, and I think they want to be they don't want to lose out on Alzheimer's disease as well. I think another interesting areas is the areas of vaccines, you know, and obviously while COVID is fading and the adoption of COVID vaccines is definitely is far beyond its peak, I think what is really re-emerging is combination therapy, you know, combination vaccination, that you maybe, you know, as your seasonal vaccination, you will get an RSV shot and a flu shot and the COVID shot. Right now, we are having, for the first time, rolling out RSV vaccines in elderly patients, and the launch has been really spectacular, especially for Glaxo. Pfizer is launching as well, and Moderna will be launching next year, and we are going to see these combination vaccines as well. So I think there is a ton of news flow in the vaccine area. Trevor talked a bit about oncology, and typically between like 2015 and 2020, oncology has been the number one theme, I think, inside the healthcare sector, and it is still extremely important. And for the first time this year, we have seen combination therapy, cancer immunotherapy to work, and I think that is a very important theme for 2024. The largest selling oncology drugs are PD-1 agents, cancer immunotherapy agents from Opdivo and Keytruda from Merck. And it's very important for those companies what they will do once those drugs lose patent expiration. And this is why the key IO combos is, I think, very, very key for some of the cancer players. I think the ADCs, Trevor talked a lot about them. They're going from strength to strength. And the industry leaders are AstraZeneca and Daiichi Sankyo, which are big, important positions in the portfolio. And another area which is becoming quite hot are radiopharmaceuticals. And then the traditional big selling drug categories are immunology and cardiovascular disease. In immunology, we have the patent expiration of the previous largest selling drug in the world, Humira, an anti-TNF antibody from AbbVie. But we have seen many second generation agents are coming forward, become major success stories. And I think this is a key area where we're going to see a lot of M&A activity. We have already seen it. All of the big pharma players, they want to be there. You know, these are big chronic disease indications. They want to have a footprint there, and M&A activity will be white hot and continue to be in 2024. And then cardiovascular disease, you know, this has been the bread and butter, I think, for the healthcare sector for many years. We had major breakthroughs in 2000 to 2010, but I think this is an area, while it's genericized now, where we can see quite a bit of innovation happening as well. And especially I would highlight there the factor 11A inhibitors, which are new antithrombotic agents. And this could be a multi-billion-dollar, $10 billion, $20 billion plus category, with Bayer and Bristol Myers being some of the leaders there. So there is a lot to talk about. 2024 is going to be an exciting year for new drug developments, for new product launches. But then I want to reiterate the one major theme for 2024 and 2025, and Trevor highlighted before, and that's M&A. You know, it's all of the big pharma companies. They want exposures to those 6 categories, what we highlighted here, and we will see transformative M&A transaction continuing here in the coming 12 to 18 months. This is overall the number one theme, I think, for the way how we have positioned the portfolio. Okay, coming to portfolio positioning. Here you see our portfolio positioning at the beginning of the fiscal year, 31st of March, and then here by our mid-year results, so 6 months later on the 28th of September. The green boxes are the ones where we have an increase in the size in the fund, and the red ones where we see a decrease. So you see here big cap pharma, that's 29.5. I think you could add actually our Japan exposure 6.5 as well to it. You know, in Japan, it's two pharmaceutical names, Eisai and Daiichi are important positions. They count pretty much here into big cap pharma. But our biggest exposure is to the weight loss drugs makers. So Eli Lilly and Novo Nordisk comprise 11% of the overall portfolio and close to a third of the big cap pharma exposure. Our biggest position is Novo Nordisk, we have 6.6%, and then Lilly are another very important one. Another big position in large cap pharma is AstraZeneca. You know, we think that's a really one of the second to Lilly and Novo Nordisk, the third fastest growing large cap pharmaceutical company. We really like that story a lot. We have been some reshuffling in our big cap pharma names as well. So by the end of the quarter, we actually sold Bristol Myers and we replaced it with Merck, which is again a fresh position. We had previously positions in Merck and we went back to it as the stock pulled back. So this is a meaningful new position there. Emerging biotech, you know, this is now 25% of the portfolio. You know, this is the part of the portfolio which require quite a bit of patience, but we feel with the historic pullback in the sector, we feel as strong as ever about the prospects of emerging biotech. Two biggest positions there are Biogen with Alzheimer's disease and then the orphan disease company BioMarin. And medtech devices, we have reduced here going into the second quarter results for in July, and I think those reductions were quite timely. So we have reduced a bit our exposure there, but we still feel really strong here in medtech. MedTech has gotten battered a little bit by the overhang from the weight loss drugs from Eli Lilly and Novo Nordisk, because people believe that there will be less use of a hip replacement or knee replacement, you know, if people weigh less. And I think some of the best stocks have actually pulled back in sympathy with the rest of the MedTech names. But our biggest names are still Boston Scientific, 5.6%, and Intuitive Surgical at 4.7%. Emerging markets, we have a little bit reduced our exposure. We reduced 4 names, but we added to another name there. And emerging markets, similar to biotech, are at record low performance. But overall, yes, you see, you know, we think the potential for a rebound is the highest in the biotechnology sector. I think other noteworthy names, maybe in healthcare services, one of our top 10 names is Humana there, the big US HMO at 5.2%. Overall, our portfolio is quite concentrated. You know, the top 10 names represent 48% of the portfolio, top 20 names, 75%, and our top 30 names, they're 92% of the portfolio. And our active share is close to 70%. Now coming to the leverage over time, you see us here at right around 114%, you know. So we do believe, you know, that the healthcare sector is cheap. It is again trading at the 20% discount to the S&P. You know, we have seen some historic pullbacks in many subsectors. So we think it's the right time to have a little bit exposure here, and this is why we are exposed to 114%. Coming to the playbook, and so you know, the overall number one theme in our playbook is always innovation. You know, we want to be in the companies who are the most innovative. We want to be in the companies who have the highest growth rates, the highest top line revenue growth rates, the highest bottom line EPS growth rates. And this is the key theme. This focus on innovation and not necessarily value has been the key to the success of the fund for the past 25 years. You know, this is the recipe for success in outperforming, I think, inside our sector. But with being in these innovative companies, sometimes it creates a little bit volatility as well, like we have seen in the recent period. But innovation, number one theme for our playbooks. I think the second theme, and I think the most important theme over the next 18 months, is our high expectations for M&A. All of the big pharma companies, they need to fill their R&D pipelines. They want new products for 2025 and onwards. So I think we continue to expect a very high level of activity in M&A. And typically here going into year end, into January, this is high noon for M&A acquisition. So during the summer months, typically you have a bit of a pause. And then the bankers start getting really active after our Labor Day holiday. And that lines up for announcing some transaction here in the November, December, January timeframe. So fingers crossed here that bankers will be very active. But you know, we had some good news here subsequent to the end of the first 6 months of the year. Mirati, which was one of our key portfolio holdings in the biotech sector, just got acquired by Bristol Myers. So we will remain patient with biotech. You know, our over allocation to that subsector has not been a winning ticket here in the past 2 years, but we do believe that we will see a significant rebound. And then Trevor already mentioned that there has been a very, very dramatic underperformance of the healthcare sector in general here of the past 12 months. That this is the biggest underperformance in the past 20 years vis-a-vis the S&P. I think that's unsustainable, and especially in a slowing economy, I think healthcare sector will outperform. And so overall, we are quite bullish here with our outlook into 2024. And with that, I would actually open it up to Q&A, and let's see. I don't see, and actually here. Okay, I'm seeing like the first question coming up here. And please type in your questions. Me and Trevor, we will really address them here in the coming minutes. We will try to answer every single question. So I think first question is great question for Trevor. Maybe what concerns do you have with the U.S. election next year?
Okay, I'll kick things off. So as you know, we do have a presidential election next year. That always brings a lot of scrutiny to the healthcare space. And there's a lot of unknowns this year, you know, in terms of who might even be the nominees for both sides of both the Democrats and Republicans. I think we're going to get some additional color on that, but are probably not too hard to predict. But what's most interesting, in my opinion, is I think all of the big legislation that could happen, that could impact healthcare, has already happened. Drug price reform has always been the big long-term overhang for 30 plus years now, going back to the Clinton era, when there was always concern about something new coming to impact drug pricing in the US. But now that's already happened. And while that's continuing to unfold in real time right now, I don't see healthcare as being as big as a platform for the candidates to run on. So overall, my concerns with the US elections next year are low. Compounding that is the fact that we expect a split Congress to continue, maybe even move a little bit more Republican, which is pro-healthcare. So overall, I would say my concerns are low with the U.S. election for next year.
Okay. And actually, there is another question kind of related to you to it, is what is the date of the first court case? And I think this is probably related to IRA, I think, this question. So maybe, Trevor, you answer this one as well.
Sure. Yes. Well, there's already been news flow related to some of the court cases. The first thing that we're trying to get through still is some of the discovery phase, also as well as opportunities to throw some of these cases out, both for or against the plaintiffs here. But they'll really inflect in earnest next year. One of the things that we don't have yet, which is going to be a key part of the company's argument, is the quantitative impact and how they will be harmed. We won't know the actual price that is negotiated for these first 10 drugs until September of next year. So I think until we have that piece of information, so the companies can argue quantitatively the financial hit that they will take, I think it's going to be difficult for the cases to move forward. There is some potential for them to be thrown out. But again, the shots on goal approach that the industry is taking, this is going to play out over 2 years. So next year, I think, will be very important in terms of next arguments, but we might not hear anything until early 2026 in terms of something from a conclusionary perspective, just to get to the Supreme Court.
Then we have a question, and I actually see a question from our longest running shareholders here, William Solomon. And actually, William wants to have a little bit of longer term perspective, say over 5 years. Maybe, Trevor, if you can you pull up like the appendix slides, and if we maybe look at, since 2015 versus the performance of the sector versus S&P. I think that's maybe that's an interesting slide. We have a couple of biotech slides here. Just one back. I think this is a really interesting slide. This shows you here in the dark green the performance of the biotechnology sector since 2015, and then you see the lighter green, that is performance of the healthcare sector in general. It's the MSCI Worldwide Healthcare. So that's up 85% over this period. And then you see the broader market, S&P is up 150%. And then you see here NASDAQ up 200%. And this is actually kind of stunning, because why is biotech flat for this period? When at the same time, you had so many medical breakthroughs. You had cancer immunotherapy, cured hepatitis C, gene therapy coming to fruition, gene editing coming, COVID vaccines, weight loss drugs, Alzheimer's disease. This has been an incredible period of innovation, I think, for the sector. And here broadly overall, biotech completely underperformed, I think, the broader market, and even the big pharma companies underperformed them. And there's one more slide which I want to see. It's like the innovation slide. Do we have that in there, Trevor?
Yes.
Yes, we see that. And I've showed it, I think, before at the annual meeting already. But this is here the increase in the drug pipeline, over the same period. So from 2016 to 2022. That's quite stunning. So you have an increase in overall industry pipeline by 70%. So innovation is alive and well. Fundamentals are terrific. But here you see, over a longer term period, tremendous underperformance, I think, of our sector and biotech in particular, vis-a-vis the broader market. Okay, let me see. I'm gonna gotta scroll up. Okay, here is another question is, do you think the broader sell-off due to GLP-1s in medtech is giving long-term opportunities, or do you think it's too early, given the strong momentum still to come GLP-1s? It's a great question, and we have seen here, every single time when you have some new clinical trial data from the GLP-1s coming out. Like, for example, you had yesterday on from Novo Nordisk on Ozempic in dialysis patients, so big sell-off in dialysis companies and medtech. Or in the summer when you saw in healthy patients who are overweight, that if you're on one of the weight loss drugs, you have incredible decrease in cardiovascular disease. So you will have significant reduction in stroke, And I think the market many times then oversimplified that, oh, the weight loss drugs will cure cardiovascular disease. You will no longer need a stent, or, well, we will no longer do dialysis. And I think that's an oversimplification there. And I've seen some of the sell-offs in medtech have gone, I think, pretty much too far. But it's really difficult to fight the momentum there, because everyone is watching it right now. And, medtech has to fight the momentum that this will not slow the growth rates overall for the medtech sector. And I think overall, the GLP-1s, the weight loss agents, will not lead to a reduction, I think, in the growth potential for the medtech sector. And ultimately, this will lead to that today's sell-offs are tomorrow's opportunities. But I think there's so much momentum right now there. People are, I think generalist investors, they're really just discovering the true impact of the weight loss agents. These weight loss agents, they're not like Botox, they're not vanity drugs. These are really transformative drugs. And I think there will be a continuation of a little bit of some of these positive clinical trial headlines for weight loss agents, and then you can see some volatility still in the medtech sector. Trevor, do you want to take the next one? That's how is artificial intelligence impacting pharma and biotech?
Sure, I can speak on that a little bit. It's been a clear talking point in 2023 as the focus on the market on AI has clearly inflected in substantial ways. And it's prompted many of the large cap companies to discuss more broadly what are some of the things that they're doing or how are they using AI. And what I was surprised to learn is that how many parts of the operation, the organization, that AI actually touches in the large cap companies. Clearly, it's a big part of drug discovery now in terms for searching for new and novel targets. The technologies over the past 10 years have also inflected there incredibly, even without AI, and the ability to screen massive libraries of drug targets. AI is just making that more effective. It's very prominent in drug development as well. The utilization of AI in terms of clinical trial design, but also patient recruitment is a big part of it, especially on a global basis, as many of the large cap companies are running big global trials across thousands of patients, and AI is helping with that. I was also surprised to see how much they're utilizing it across commercial execution, even sales and marketing. AI is there. So it's really touching all parts of it. I think we can still debate a little bit of the outcome, the impact that it's having, at least on a measurable scale. But it's clearly there, and I think will continue to be utilized going forward.
Okay, so we have another question here related to GLP-1s, but it's a two-part question. Maybe both me and Trevor will answer that. So, would earnings be impacted much by a recession? For example, a lot of the portfolio is in more elective services or drugs. And the second part of the question is, perhaps if people have to pay for weight loss drugs themselves, the sales could be much lower than expected. I think the first part of the question, if we go into a recession, actually healthcare is one of the most defensive sectors in a recession. Typically, people cut back on everything else, but healthcare first. So typically, a recession, going into a recession environment, healthcare outperforms, I think, the broader overall market. So I think that should be, on a relative basis, good for the sector. I think in general, the earnings are very little impacted during a recession. And then, the second part of the question, well, if people have to pay for weight loss drugs themselves, would sales be much lower than expected? I think a key part of that is, a lot of the weight loss drugs, Wegovy has been very limited supply. And Mounjaro from Eli Lilly, you wouldn't even get it prescribed if you would not have diabetes at the same time. So there is such a huge pent-up demand that I think there is going to be a very, very big bolus of people actually waiting to finally get their hand on the weight loss on the weight loss drugs. And I think this has been, a lot of it has been a cash payer market as well. People are really willing to pay for weight loss. I think here in the United States and in Europe as well, I think the insurers, they have been restrictive, with giving patients access to the drugs. So if you wanted the drugs, you had to actually pay out of pocket. But this hasn't stopped anything with people actually going to a doctor, asking for a script, and self-paying the drugs. And I think the results are so dramatic. These drugs are really transformative. It's like, I think there will be a very, very large sales growth rate here going forward. Trevor, anything else you would add? Or
Yeah, I would love to add on to that. Who is going to pay for weight loss drugs has always been the Achilles heel in the obesity sector, as Sven explained, that it's always been considered a lifestyle disorder, not a disease, and therefore insurance companies or payers would not cover it. But I think that is completely changing with this class of drugs. As we discussed during this presentation, the cardiovascular outcomes trial for Wegovy by Novo, demonstrating unequivocally its benefit on cardiovascular risk reduction, both stroke, heart attack, and cardiovascular death by 20%. I don't know how you can deny that therapy to a patient. And I think this is the first door that will open to address concerns about payer coverage. It's going to be akin to denying someone statin therapy or cancer therapy once those drugs have demonstrated a survival benefit. It's very difficult to do. But then moreover, we've also seen these drugs have impacts now in heart failure and reducing the burden of patients with heart failure in a clinically material way. The data that we just saw on chronic kidney disease from yesterday is also extremely important. Also sleep apnea and fatty liver disease. These additional indications that are not related to obesity will be covered and will provide either a front door or a back door for coverage for people who want these drugs. And that'll play out over the next number of years. But I'd also echo one other thing that Sven said. We are seeing demand for cash pay for some patients here in the US, even though the coverage here is very good. But so far, there's only been 2 or 3 countries where Novo has rolled out in Europe Wegovy, and people are lining up to pay for it. Maybe the longer term outcome of that is the price comes down, but the volumes are going to be incredible. Obesity on a global level is the largest total addressable market we've ever seen, and these drugs work incredibly well there.
We have 3 more questions on 3 more questions, and actually the last question, let me start with that one first, and I hand it over to Trevor because it's GLP-1 related. So, are there benefits from semaglutide and similar drugs in treating addiction mentioned earlier this year? Maybe you take, Trevor.
Yeah, that's a very interesting question. That is now a pretty new talking point for this class of drugs across a host of mental disorders. Certainly, addiction is one of them. This drug impacts your satiety center, your sense of feeling full from a food intake point of view. But there's also evidence to suggest that it dulls your motivation to take things or do other things you might be addicted to. But other opportunities in terms of the mental order spectrum include binge eating disorder, which this could have a dramatic impact on, or other food-related anxieties. So yes, there is some possibility there. The number of potential indications is really quite staggering. You know, we have line of sight on like 7 or 8 of them. Even Alzheimer's disease, there's a phase 3 trial ongoing. So I don't want to get too carried away with the long list of potential indications that the GLP-1s can impact, but it's going to be significant. And just one other thing, I'll just remind everyone who's listening, and Sven mentioned it as well, but next generation drugs are around the corner. As exciting as Wegovy and Mounjaro are, both Novo and Lilly have next generation drugs in pivotal phase 3 trials that are even better and more efficacious than the currently available ones. It's such a fascinating thing. Novo had this great quote. It's a little bit US centric, but someone was asking, and using a baseball analogy, what inning are we in terms of the GLP-1 success story across all these indications? And the answer was, well, we're still in the pregame warm-up. So there's a lot to go. I have a feeling that Sven and I are going to be talking about these drugs for a number of years.
Okay, the last 2 questions, I'm going to answer both of them at the same time because they're kind of interrelated. So the one question is, to what extent does a higher interest rate environment affect the funding for emerging biotechnology companies? And the other question was, you have been investing in small cap emerging biotech companies for many years. How does this period of time compare to other episodes of stress in the past? Trevor, maybe go to the cash slides actually on biotech, you know, with the they go this is pretty
interesting. It's common.
Okay. Yeah, this one, this one here. This shows you, you know, and it's a great question, you know. It's like, how does this biotech bear market compare to previous ones? And I think there is a really clear difference between previous ones. You see here, you know, cash as a percent, companies trading below cash on the balance sheet. And you see here, like 2 bear markets before, like 2002, which was the dot-com bust, and then you have 2008 and 2009. Now, back then, in those bear markets, you really knew the reasons why has biotech sold off. You know, in 2002, the reason was obviously Nasdaq bubble burst. But second part is we had in biotech a genomics bubble which burst, and you had a very, very cautious FDA because they took off a lot of products off the market in 2002. And that was the reason why you saw this big sell-off in 2002. 2008, you had not only the financial crisis, but you had as well Obamacare on the horizon, you know, the Affordable Care Act, when you had Democrats in full control of the Congress, and you had a major healthcare reform on the drawing board, creating max uncertainty. In those periods, you know, when people ask me, what's the reason why biotech sold off? I could very, very easily name it. Today, it's different. You know, if you look at the past 3 years, you know, it's the most severe drawdown in biotech. There are a number of reasons, but none of them are really the overwhelming reason. Interest rates, increasing interest rates, one of them. You know, the start of more passive investing using sector benchmarks like an XBR as hedging for short selling, for example. That has been another factor. Another factor has been, I think, the political overhang on drug pricing. but it's not a really clear a single reason why we had this sell-off. And I think this is where today's sell-off is quite different from previous ones. And as you can see here, you know, this is really historic. You see it as well in valuation metrics. We have never seen the sector trading at those cheap valuations. But then addressing the interest rate question, I think this has been, I think, in recent weeks and in the past few months, as interest rates have moved up here in the United States, that has been like the tail that wagged the biotech dog a little a bit. And I think it has been in the past few months has been interest rates has been a theme for biotech, you know. But as I said, I think a lot of these things are very well discounted, and I do believe that I think the biotech sector is due for a significant snapback. And I think with that, I would end the call, and I would thank everyone for joining the call. And maybe I hand it over to Matthew for some closing comments.
Yeah, no, thank you very much, Sven and Trevor. That's extremely useful. And thank you to everyone who's been listening in. If you have any further questions, please email ir@frostro.com, and a recording of this will be sent in due course. But again, thank you both so much for your time.